You should think of Bitcoin as a coiled spring, just ready to explode higher.
Always like to talk about Bitcoin going parabolic.
Technically, Bitcoin's classified as a commodity, and that's the one that's really been showing somewhat divergent strength lately.
If you zoom out, you tend to see the kind of longer-term fundamental thesis of something like Bitcoin.
And if Bitcoin becomes an asset that's held by governments, by corporations, by institutions, I see no reason why it won't meet parity with gold.
It's giving us signals of a great reset.
Bitcoin is about to explode just like gold. Take a look at gold's price chart. Bitcoin's price is about to do this, at least according to 5 different investing experts. Today I'll show you updated Bitcoin price predictions from ARK Invest's Cathie Wood, Bloomberg's Mike McGlone, Bitwise's Matt Hogan, Wall Street's Anthony Pompliano, and BlackRock's Jay Jacobs. It's amazing to see how their Bitcoin price predictions are the same and how they differ. The common denominator here being that all 5 of these investing experts are issuing massive warnings, shouting, "Buy Bitcoin before the price explodes. What's happening with gold now is about to happen with Bitcoin." Smash the like button, support the channel, send this video to one friend who's interested in Bitcoin. Let's start here with Cathie Wood, CEO and founder of ARK Invest, 9 billion assets under management. If you follow us on X, you already know ARK Invest recently updated their 2030 Bitcoin price predictions. Their bull case is now 2.4 million. Their base case is 1.2 million. Their bear case for 2030 is 500,000. So this is their long-term outlook by 2030. In the more short term, Cathie Wood says that just like gold, Bitcoin too is now about to explode. Bitcoin's time is now, and what we've seen happen with gold over the last year or so will now start to happen with Bitcoin. Here's why.
And then finally, always like to talk about Bitcoin to gold. And again, gold going parabolic did take this ratio down, but you'll notice that it did not break the uptrend that is in place and that we think will remain in place. Bitcoin did act more as a risk-on asset in the market's recent correction. It behaved like the NASDAQ, unlike gold. But we believe that it was just correcting to this trend line because the Bitcoin price went up so much more than the gold price last year. So we think that this trend line will continue to move up if we're right that we're moving back into a risk-on environment. Now, the gold, why did gold act as risk-off, but Bitcoin not do so? I just described one reason. Bitcoin was way ahead of the gold price, so that is one reason. But I think the other reason is we weren't in a financial collapse like 08, 09. And the banking system was, or the counterparty risk in the banking system was not called into question. So we think the flight to safety into gold was more of a, hey, let's readjust and get this back into some kind of trend line.
Entrepreneur and investor Anthony Pompliano has always been a big Bitcoin bull. So I like that in this video, he brings different data, different metrics, comparing Bitcoin's price action and gold's price action. He says gold exploding and Bitcoin's price lagging behind, it's actually very normal, but history shows us that Bitcoin's price is now less than 100 days away from exploding too. Very informative analysis. I love studying history like this.
You should think of Bitcoin as a coiled spring, just ready to explode higher. The harder that gold runs without Bitcoin, the more violent the move in Bitcoin should be. Bitcoin is up over the last 5 days, while gold has been falling. This outperformance is a departure from the trend year to date, where gold has been significantly outperforming Bitcoin. Gold's up more than 20% since January 1st, and Bitcoin's only up 3%. As I continue to say, both assets embody the sound money principles that investors are seeking during times of uncertainty. But here's one key data point to understand to get an idea of what happens next. Bitcoin usually lags moves in gold by about 100 days. Jack Green put together this great chart to show how the relationship worked in the last 2 years. Now, if the trend holds, if you go back even over a decade as well, David Foley shows that with this graphic right here. It's important because gold has been appreciating aggressively while Bitcoin has lagged behind. This is actually normal and not something to be concerned about. Instead, you should think of Bitcoin as a coiled spring, just ready to explode higher. The harder that gold runs without Bitcoin, the more violent the move in Bitcoin should be 3 to 4 months later. A big reason for this is that Bitcoin is much more sensitive to global liquidity than gold. The digital version of sound money is always going to be the better performer because of the smaller market cap and the larger addressable investor base that is yet to allocate to the asset. So gold has had a great run, but I believe it's Bitcoin's turn to join the party now. The world is adopting a new monetary asset at a time that the global monetary order is being restructured. You literally couldn't draw up a better script for the rise of Bitcoin.
Mike McGlone is the senior commodity strategist at Bloomberg Intelligence. He says he isn't surprised at all that gold's price has been running because he sees a great reset taking place, and Bitcoin is going to be one of the most relevant commodities going forward.
It's giving us signals of a great reset. I just went back and compared the best years of gold from the last 100 years, and this morning gold was ranked 7th. Guess what year was behind? 1934. 1934 is significant because that was the year after we devalued our FDR devalued versus the gold and confiscated a lot of gold. So we're in a very scary area for gold. So this is pretty good resistance, 3,500, pretty good a level to watch for. You know, it could easily drop down to 3,000. But overall, it's a signal that I'm getting from gold is this is the deflation from the inflation we got from the biggest money pump in history to that peak in 2022 in the stock market and things. Now it's all starting to trickle down.
Hey, Mike, we talk a lot about oil. We talk about gold with you. What's the thing in the commodity market that's most on your mind right now?
I don't know if we want to put it in the same category, but technically Bitcoin's classified as a commodity by the CFTC, and that's the one that's really been showing somewhat divergent strength lately.
Yeah, the kids don't talk about Bitcoin as much as they used to.
Oh, they do. No, they totally do.
Okay.
I mean, you just listen to Katie, Tim.
Okay.
They totally talk about
They're
it.
still talking about it.
Yeah.
All right.
Is it moving as a safe haven, Mike?
It has been, shockingly, because in my view, it's people claim it's a safe haven, but it trades at much higher volatility than the stock market and gold. But I think what's really kicked in lately is distress in the U.S. bond market. People are saying, okay, if we're having issues with the world's safest securities, mostly long bonds, maybe let's go to Bitcoin. But it's giving us signals of a great reset, the things that some of us wrote about a couple of years ago.
By the way, trading crypto is a great way to make money whether the market goes up or down. You should sign up for crypto exchange Bitchunex to long or short crypto with no KYC. It's incredibly easy to trade on Bitchunex. Check our pinned comment or in the description. Use code Altcoin Daily for up to $8,000 in trading bonuses. Next up is 12 billion AUM Bitwise, their CIO Matt Hogan, perhaps with the most interesting analysis in this whole video. He says that he sees Bitcoin's market cap reaching a parity with gold's market cap over the next 4 years. That 4-year time frame, huge that he's putting his reputation on the line here. Interesting to hear his thesis in this clip because he says if this happens, Bitcoin's price will reach $1 million by 2029. This is a very bullish adoption prediction for Bitcoin. Tell me what you think.
We elected a pro-crypto administration in the U.S. We've established a Bitcoin strategic reserve. I think you're going to see governments around the world buying Bitcoin. I think you're going to see institutions buying Bitcoin and corporations buying Bitcoin. And if Bitcoin becomes an asset that's held by governments, by corporations, by institutions, I see no reason why it won't meet parity with gold within the next 4 years. I sort of think we're in this new 4-year or multi-year cycle of government and institutional adoption. And I think the end point of that is parity with gold, and that's $1 million of Bitcoin. If we don't see these entities come into the market, then we won't get there. But I really think we will, and then it will be interesting to see where Bitcoin goes from there. But let's at least get to parity, and then we'll start working on the hard yards.
Make sure you subscribe to Altcoin Daily for daily videos keeping you informed on everything crypto. BlackRock has 11 trillion assets under management. They are the biggest wealth manager in the world. You know that BlackRock is now one of the largest Bitcoin bulls on the planet. When BlackRock speaks, the world listens. I could easily play you one of the many clips from their CEO, Larry Fink, himself giving his bullish Bitcoin outlook.
I was with a sovereign wealth fund. That was the conversation. Should we have a 2% allocation? Should we have a 5% allocation? If everybody adopted that conversation, But, it would be 500,000, 600,000, 700,000 per Bitcoin.
But I really like this explanation from BlackRock's head of equity ETFs, Jay Jacobs. He says that what BlackRock is seeing and what BlackRock is predicting is a big Bitcoin decoupling. And just like gold, he sees prices for Bitcoin going a lot higher. Amazing explanation.
We would think over the long term, if this is the trajectory of kind of greater uncertainty around the world, that things like gold and things like Bitcoin should continue to go up.
Do you think crypto is now about to decouple from U.S. tech stocks? Many are talking about sell U.S. assets kind of behavior in the global markets. Do you think this is the moment?
Well, crypto over the long run is decoupled from U.S. tech stocks. I think what you have to look at is, are you looking on a short-term basis or are you looking over a longer-term basis? Over a short-term basis, you can see all types of different assets have rising correlations to each other. And in fact, if you look at the last few weeks under more market uncertainty, you've seen everything from stocks and bonds to crypto trading with higher correlations. But if you zoom out, you tend to see the kind of longer-term fundamental thesis of something like Bitcoin really drive it to behave differently than traditional assets. The long-term correlation between U.S. stocks and Bitcoin is more like 0.2 or 0.3. It's a lowly correlated asset. And it's because what drives stocks, which tends to be things like higher growth, higher certainty, lower geopolitical risk, many of those things actually are kind of opposite drivers for Bitcoin. Bitcoin thrives when you have more uncertainty and are looking for something that's going to behave differently. So fundamentally, this should behave like an uncorrelated asset. And I think as we continue to see more time play out in this uncertain environment, you will see a dispersion between these assets. We would think over the long term, if this is the trajectory of kind of greater uncertainty around the world, that things like gold and things like Bitcoin should continue to go up. It is this type of uncertainty where people are looking for alternatives, parts of their portfolio that are going to behave separately from stocks and bonds. We've seen it in the flows. We've seen it in how investors are positioning. We've seen significant inflows into gold ETFs. We've seen significant inflows into Bitcoin. And this is all because people are looking for those assets that will behave differently.